A couple of tweets this week, and just like that, $2.5 trillion of global equity market cap evaporates as stocks went from everything is awesome to the worst week of the year in an instant. The week in U.S. equity markets has been dominated by algos chasing headlines about trade talks, with dead cat bounces giving reality checks along the way. Then there was Bitcoin to the rescue, but Uber stalled even before the light turned green. So, what do the charts look like? I'm so glad you asked that question. Let's take a look. This week and past weeks, the weekly chart's where the action is, so this is where we're going to start. However, I assure you, you're going to want to stay around for the entire video because I'm going to tell you something that you will not hear from anyone, at least for weeks. We're way ahead of them. And no one, I mean no one, has any idea because they're all looking at the wrong thing. So, for all my subscribers and viewers and JB, stay tuned. All right, we're looking at the weekly chart. 2-year closed at 288.10. This is the previous high here. That was a record, slightly eclipsing this level here and certainly above that level. So we moved through the head and shoulders pattern into a double top pattern, but it looks like we punched through that, not convincingly, but I still don't think it's going to be a problem. Now, if you're looking at this chart here, the price chart, simply the price chart, what do you think? Are we going to fall this far? Are we going to fall this far? Well, I'm not sure, but I have my suspicion that we are going to fall, but I don't think we're going to fall as far as 260. Maybe not even 270, maybe somewhere around 280, in the 270 to 280 range. Now, it's the monthly charts that are giving me the clue here. So I'm kind of cheating because nobody else looks at that stuff, but I do. So it gives me an idea, and you'll get the idea. So let's move through the oscillators here. Looking at the MACD, this is the level, pretty much consistent with this previous level here. But are we going to fall all that way? No, I don't think so. Are we going to go the distance from about there down to here? Not quite sure. I actually think, based on the monthly chart, that the fast line is going to move through in a very shallow manner. We might even be able to stay above zero the whole time. Moving here into the histogram, definitely we're rolling over, but not real fast. Moving into the price rate of change, this does look like it came down pretty quickly, but we've seen that. We've talked about that, and I still don't think it's going to be a problem. RSI, we've talked about this downtrend for a long time, and it bit us, but we've known it. Now, are we going to stay above 50? It might pierce below 50. That's a true possibility, maybe even a probability. So we'll just watch that. And here into stochastics, we have a pretty sharp decline here with the separation starting to accelerate. So if you look at this, it looks like this might happen, or even this might happen. Well, again, I don't quite think that we're going to go this far down. We might not even come this far down. So let's move through here. Volume's always been a thorn in my side. Won't have to stay there and talk about that anymore. Williams following along with the other oscillators. So again, the clues for what's going to happen, I think I'm finding in the monthly. Even though the action is in the weekly, I think the clues are starting to show up in the monthly. So let's go there. So now we're looking at the 20-year monthly chart on the Spiders SPY. Now, if you read the news or you listen to CNBC or the pundits, they're going to march out some of the pundits saying that the market's cracking and we're going to crash and we're going to go here, we're going to go there, whatever. And they're not going to be able to put up much information. Everybody knows how the economy is doing versus what we're told, and how the employment is versus what we're told. None of that is really all that meaningful right now. So looking at this chart here, we are definitely elevated on the price. But I think we're going to have this correction. And as I've been telling you for probably months now, I think that the correction we're going to have is going to be similar to the 2015, 2016 correction. We're not going to have a crash. I just don't see us having a crash a la 2009. We might have something also on the level of 2011 into 2012. So let's go and see why I think that. Looking at the MACD, you can see that we had the fast line move through the slow line and it kind of bounced off of that 10 level. It moved on up toward the slow line and it's getting reflected back. If you go back into history into 2015, 2016, to me it looks very similar to this last portion here where the fast line moved, went sideways, and then kicked up toward the slow line. And it actually probably went parallel with the slow line here as opposed to getting reflected back. But that's just a minor concern. I think we're going to do something very similar to this. We're moving through and up, and we'll probably go somewhat parallel while we have this little correction. Let's take a look at this point here. Go back up to the price chart. You go back up to the price chart. We had this correction here first, but we had this itty bitty correction or move at that point in there. Now, what we're experiencing now is a little bit more severe than that, but it's close enough for comparison in my eyes. Another time frame here, 2011, 2012. Fast line moved through, had a negative move under the slow line here for just say several months, but then moved back up and over and off it went for a couple of years. Here in the 2015, 2016 time frame, once it moved through the slow line, we had a pretty good move for another year or two. Again, I think that's what's going to happen. Moving here. Here's some more evidence for you. The level we went there in late 2018 was somewhat consistent to this level. Perhaps not as favorable as that, but definitely we're not going there. So some consistency here. Moving into the price rate of change. Looking at that chart, you see the very steep downtrend there. But we're up, we moved up, we got reflected back, but the reflection was very shallow. Not too bad. We're above zero, so we still have strength. It looks to me something like this. We had this move on up. It did go through the slow line, but it had a shallow correction there, and we had some sawtoothing, and then we were on our way up. I think that's what we're going to get. We're going to get this shallow, slow line, and the fast line is going to do some sawtoothing before it climbs up and above and moves on up. Not all that unlike this move here. Moving down into the RSI, the same sort of thing. Look at this move here. And again, look at this move here. Now, we had this decline in late 2018 to that level there. Not all that different than that level there, and not all that different than that level here. This level was there. It did continue on down here, but I don't think we're going to get that continuation. We've moved above the 50 line, and we've got some strength. Some strength is building. We have this correction going once again, but we're in that mid territory where things aren't so bad as they were here and as they were here. Moving down to stochastics. Same sort of thing. Very similar. This move here to this move here and to this move here. All those three levels are above 50. They had some strength. Yeah, it was not fun to have that move down here, nor was it fun to have that move down here in 2018. But we may have seen the worst of it. So far, I think that's what's happening. Volume still continues to decline, and that's still a thorn in my side. And I don't think the Williams is going to really show us much other than the fact that here's that level there in late 2018. Here's where we were in 2015. 2011 was actually worse, at least by the Williams. But I don't think that we're that bad. So once again, this to me is telling me we're not going to be nearly as bad as this crash here. I think it's going to be a la 2015, 2016. Go back up here. We're going to have a little bit of correction in the price. I think we're going to stay maybe near the 20 EMA. If it goes through the 20 EMA, I think it's only going to be slightly through, and it's going to stay above the 50 EMA. So, JB, even though I was hoping that we'd have a good sized correction where you can place some money, maybe it's good news that we're going to have a correction, but I think the market may be on its way once again after we're through this correction. Now, only time will tell, and we'll be watching this on a weekly basis. But I guarantee you, I'm the only one that you're going to hear this from. Nobody else has any clue. So, stick with me. And if you're not a subscriber, consider subscribing. We'd love to have you. For today, that's ChewDog Charts. Thank you.